All right, let's talk about Hippo's latest earnings because, wow, they just dropped some seriously impressive Q3 numbers. But the real story here isn't just the headline figures, it's how they got there. We're going to dig into the CFO's report and unpack the massive strategic shift that flipped this company from a loss to a big-time profit. So let's dive right in. Okay, so the first thing that jumps right off the page is this number, a 33% year-over-year increase in gross written premium. Now, that's just the total amount of money they're collecting for insurance policies, and it hit $311 million. That is a huge leap. But, and this is a big but, that's not even the most interesting part of the story. So where did all that growth actually come from? Because let's be real, a big flashy number like that can sometimes hide what's really going on. And what's happening just beneath the surface here, well, that's where things get really fascinating. See, this wasn't about just getting bigger. This was a very deliberate, very calculated plan to grow smarter. So let's get into the engine room because the key to all this was a major strategic shift in their portfolio. Think about it this way. Hippo decided to fundamentally change the recipe of what it sells. They're changing the mix of insurance policies they offer, and it's all part of a plan to build a much stronger, more resilient company. To really get this, we need to rewind the clock just 1 year. Back in Q3 of 24, Hippo's business looked pretty different. It was really, really concentrated. Almost half of their entire business, 47%, was in homeowners insurance. Now, that's a business that can get hit hard by things like hurricanes and wildfires, a lot of risk in one basket. Okay, now let's fast forward to today. The picture has completely changed. Look at this. Homeowners insurance, it's down to just 32% of the mix. And in its place, you see these other lines, like casualty and commercial, just surging. The incredible part is how fast they did this. We're talking about a massive transformation in just a single year. And here are the cold, hard numbers that back it all up. You can see it right there. Casualty explodes from 14 to 25%, commercial jumps from 13 to 21%, and at the same time, the homeowners line shrinks. Now, the CFO was really clear about this. This wasn't a sign of weakness. No, this was a conscious decision to be more selective, to focus on writing good, profitable business instead of just chasing volume. So the big takeaway here is that none of this was an accident. This was a planned pivot. They basically said, we're willing to slow down a bit in our old core business to pour fuel on the fire in these other more stable areas. And what you're seeing is the proof that their diversification strategy isn't just a talking point on a slide. It's actually happening. Okay, so a strategic pivot sounds great in a boardroom, right? But the real question is, did it actually make a difference? Did it work? Well, let's look at the proof, because this shift in their business mix had a huge, direct impact on the company's financial health. And here is the payoff, plain and simple. Check out these numbers. Their net loss ratio, which is basically how much they pay out in claims compared to what they bring in, got better by 25 points. And their combined ratio, which is kind of the all-in-one scorecard for profitability, improved by an incredible 28 points. In the insurance world, those are not small moves. Those are giant leaps forward. And that 28-point jump brought their combined ratio right to this number, 100%. Now, for anyone who follows insurance, you know this is a magic number. It's a huge milestone. But what does hitting 100% actually mean? It's actually pretty simple. A combined ratio of 100% means you're breaking even. For every single dollar you bring in from premiums, you're spending exactly $1 on paying claims and running the business. You're not making money on underwriting, but you're not losing it either. And considering where they were a year ago, just breaking even is a massive, massive win. So the strategy's working, the core numbers are way better. Which brings us to the bottom line. Let's see how all of this actually translated into profit. And there you have it, $18 million. That's their adjusted net income for the quarter. Now, to really put that into perspective, just think about this. Last year, in the same quarter, they posted a loss. This represents a $19 million swing from loss to profit. It's a complete 180-degree turnaround. So how'd they pull it off? Well, according to the CFO, it wasn't one magic bullet. It was the 1-2 punch we've been talking about. First, that much, much better underwriting performance, which came directly from their strategic pivot. And second, that strong top-line growth, which is now coming from a much healthier, more diversified mix of business. One great quarter is fantastic, but what's even better is when it gives a company the confidence to raise its expectations for the whole year. And that's exactly what happened here. Because of this performance, Hippo is now raising the bar for the rest of 2025. Just look at this comparison between the old guidance and the new guidance. Yeah, they nudged up their revenue forecast, which is nice, but the real headline, it's that adjusted net income. They literally went from telling investors they might lose money for the year to now projecting a solid profit. That is a night and day difference. So let's just tick off the highlights here. They're expecting to write more business, raising their premium guidance by about $15 million. They think their loss ratio will be even better. And most importantly, look at that bottom line. Their guidance for the full year went from a potential loss of $4 million to a projected profit of $10 to $14 million. You just can't overstate what a massive shift in expectations that is. So when you step back and look at the big picture, what Hippo pulled off here was a textbook strategic pivot. They made a tough choice to slow down in one area to build a healthier, more profitable company overall. The results this quarter speak for themselves. The question now, the one everyone will be watching, is simple. Can they keep this momentum going? Is this the start of something new and sustainable, or just one great quarter? We'll have to wait and see.